Recession-proof stocks. That is the topic of today's video. Because look, we all want our investing gains, okay? We all want our money to grow exponentially, to grow every year. And hey, if those investments can also pay us dividends every single month, then that's even better. The problem comes in knowing which stocks to choose, okay? Because there's no point in picking a stock that's not going to withstand a recession, that's going to, plummet in value, plummet in earnings, and is actually going to lose you money. So that's why I've made this video. I want to reveal 5 stocks that are recession proof, that has really performed really well in the past during the last few recessions, and therefore, in my opinion, should do pretty well in the future recessions, including the one that we should be in right now, depending on where you're watching this. And then if you stay till the very end of the video, I'm actually going to go one step further, okay? I'm going to reveal the beta value of these stocks, okay? Beta, if you don't know what it is, it measures the volatility of the stock prices, depending on whether they're more volatile or less volatile than the overall market. But that's going to be at the very end of the video. Before that, let's get started with these 5 recession-proof stocks. Now, buckle up, fasten your seatbelt, give this video a like if you're enjoying it so far, and let's go. Hey guys, my name is Ricardo Torres and I'm a dividend growth investor. If you're new to this channel, I basically talk about personal finance, but mostly investing, specifically dividend investing, okay? So if you're interested in that at all, just make sure to subscribe to this channel because I release weekly videos. And one of the things that I talk about the most is long-term investing. Long-term investing has been shown year and decade after decade to really beat short-term investing, okay? I don't talk about trading on this channel. I talk about investing in excellent businesses that are very likely to grow your money in the long run. Now, the hard thing about long-term investing is being able to stay patient, being able to resist drops in the stock price, okay? They happen all the time. They happen in recessions especially. That's why it's very important to if you're worried about that, if you're going to be tempted to sell a stock because its stock price is going down, because the market or even its sector or its industry seems to be not doing very well or is cyclical, if that's going to tempt you into selling those stocks, then perhaps you should pick sectors and industries that are more recession resistant. And that's exactly what I'm going to reveal in this video, guys, okay? 5 stocks, one from each sector, that tends to do better than other sectors during recessions. In fact, these 5 sectors have not been affected as much as other sectors during the recent coronavirus drama or outbreak, okay? And the ensuing recession that is going to affect the entire world. Actually, a few weeks ago, I put out a video that got a pretty good reaction about what, my personal outlook, my personal reaction to the coronavirus outbreak and how it has affected the markets. If you're at all interested, I'm going to put a link to the video. It should pop up somewhere in this frame. So make sure to click on that if you are interested. But just before I reveal and we get really stuck into the meat of the video, I'm a dividend growth investor, which means that I don't invest for ridiculous growth, okay? I don't invest in the stock that's going to double in the next 6 months. And as you're about to notice, even though these 5 companies have been very good at increasing their earnings and therefore their stock prices, they also pay dividends and have been doing so for a very long time, okay? There definitely is a correlation between being able to increase a company's dividends and the performance of the company itself. Only really the best companies are able to do that, to increase the dividends year after year. But because these companies are both great, at increasing earnings and also dividends, you get a really good blend between income now and growing income, but also growing stock price, okay? It's really a great place to be. It's a great balance between the two. And actually, as a general rule of thumb, if you add a company's dividend yield, okay, how much you get paid in dividends, depending on the stock price, if you add that to the growth in dividends, okay, that tends to give you your expected annual return. So let's say you've got a stock that has a dividend yield of 3% and it increases its dividend every year by 7%. If you have 3 and 7, you get 10%. Now, if your money grows at 10% every year, that means that it should double every 7 years, guys. Okay, I've just used a concept called the rule of 72. I've actually got a video about this, and again, I'm going to link it somewhere in this frame. It basically lets you calculate how long it's going to take for your money to double based on the rate of growth. Now, I've been talking for way too long. Let me now actually tell you what these 5 recession-proof stocks are. Now, for every one of these stocks, I'm going to tell you the sector that they're in, okay? I'm going to tell you what they do. I'm going to tell you what the dividend growth track record is. And I'm also going to tell you what analysts expect that these stocks will do in the next few months and the next few years. So the very first stock is Hormel Foods. The ticker symbol is HRL, and this is my favorite kind of company. It's a boring company, okay? They make packaged foods. And even though most of their brands are actually, heavily US based, they do serve 80 different countries. So they're pretty well internationally diversified as a company. Now, people use packaged foods all the time, but especially during recessions, when, especially during this coronavirus outbreak, there were times when people went to the supermarket, they were not sure whether they were going to be able to have, fresh food for a long time or even food during a long time. That's what happens when people become fearful, okay? That's why, packaged foods tend to do very well during recessions. People buy packaged foods because they know they're going to last quite a long time. And the past performance of Hormel Foods has been really, really good. Here on your screen right now, you should be seeing some data about the company and its dividends, particularly the ridiculously long dividend growth streak of 53 years, guys. 53 years of consecutive dividend increases without missing a single year of increasing their dividend. Now, their dividend yield is 2%, okay? It's not the highest dividend yield, but it's also not too bad either, okay? You're not going to get a lot of current, cash flow. However, it makes up for that in the 5-year dividend growth rate. It currently sits at 16%, which is extremely quick. Now, again, remember what I told you about your overall return. If we add 2% to 16%, you get 18%. That is, as a rule of thumb, what your money, would have grown over the last 5 years, on average. But yeah, overall, I love Hormel Foods. Just to be wide open here, I do personally own Hormel Foods in my portfolio. I love it. I've owned it for many years now. And I forgot to mention this, but this company belongs to the consumer defensive sector, right? This sector tends to do pretty well over recessions because it consists of consumer companies that make products that people are unwilling to give up even during recessions, okay? That's why you've also got consumer discretionary. Things that people will often cut from their budget, okay? Not the case with Hormel Foods. That's why it's the first stock that I've picked for this list. Now, the second stock that I've picked for these 5 recession-proof stocks is a technology stock called Microsoft. I don't think Microsoft deserves any introduction because, I'm pretty sure you've used one of their products, okay? Either Windows or Office, Microsoft Word, Excel, etc. Now, this used to be quite a boring stock. It wasn't that popular, but it's really gained popularity in the last few years. It used to be a growth stock. Now it's a dividend growth stock. And it's actually got a dividend growth rate of 18 years. This actually says 16 years, but I'm pretty sure that they've been increasing dividends since 2002. So that's 18 years. I'm afraid this is the wrong data on Seeking Alpha. But yeah, they've got definitely a very low dividend yield. Okay, 1.14% by all accounts is a low dividend yield. But then again, have a look at the 5-year growth rate, 10.45%. That's really good. I'm not really going to talk about the payout ratios in this video, but 35%, very, very safe dividend, at least in terms of the earnings. Okay, the dividend is more than covered by the company's earnings. Now, what I love about Microsoft in particular, and why I have picked it as my tech stock, okay, even though tech stock is a bit of a crazy sector with a lot of really fast growers, is that it's got really strong brand power. Okay, people know Microsoft, people know Windows, they know Office, all right, they know their products. And even though during a recession, people are not going to really buy new computers as much, they will still be using the software, whether that's at work, whether that's at home. So that's why, Microsoft is really well positioned in that aspect. Plus, it's really well poised to keep delivering strong results because it's really heavily involved in 5G and also cloud computing. So yeah, definitely a stock for the future. But that's not just me saying this. Have a look at what analysts reckon Microsoft will do over the next few quarters. Okay, we're now in Q2 2020, but analysts reckon that it's going to keep increasing. Their earnings should keep increasing during the next few months, despite the recession, despite the coronavirus. And actually, if we keep scrolling down, the analysts reckon that, yeah, the EPS will keep growing over the next 2, 3, 4 years. Okay, quite nicely. So yeah, that's Microsoft for you. Very, very recognizable stock. It should definitely do well in a recession. The only issue, of course, is the low dividend yield. But if you can look past that, Microsoft should be quite a good stock to own. Now, just before we carry on with the other 3 recession-proof stocks, I just want to give out a quick disclaimer. I am not a financial advisor. I am not licensed to actually, instruct anyone to buy certain stocks. Always do your own research, do your own due diligence, okay? You have to promise this to me, otherwise, just quit out of this video and never come back again. But yeah, honestly, do your own due diligence, do your own research. This is not a recommendation to buy, okay? Now let's carry on with number 3. And that is Air Products and Chemicals, okay? Yet another boring stock. They make gases, they make chemicals, they sell that to industrial companies, and they have a very, very long dividend growth streak, sitting right now at 37 years. Now, the dividend yield is better than the other ones. It's still definitely a little bit too low in my opinion, but bear in mind, the dividend yield depends on the stock price. So at these prices, maybe a bit of a low yield at 2.4%. But, again, this is another fast growing or fast dividend growing stock with a 5-year dividend growth rate of 10.26%. Now, Air Products and Chemicals is part of the materials, okay, raw materials sector, and it's not an industrial company. I've not included industrial companies in this video because the industrial sector tends to be very cyclical. It does really well when the economy is booming, and it does really poorly when it's not. So even though it actually supplies industrial companies, it's still expected to keep producing pretty strong results. Have a look on my screen right now. These are the expected earnings per share over the next few quarters. They're actually expected to grow, which is pretty crazy considering that, industrial companies that use the services probably are not doing very well right now. They're probably not using the, APD's products too much lately. But yeah, it's still poised to do very well. And if we keep scrolling down into what this company should provide over the next few years, analysts reckon it's going to perform very, very strongly, okay? So 2020, it should give $8.48 in earnings per share, but this should actually keep growing year after year, again, at least according to analysts. One last thing I want to say about Air Products and Chemicals is that it's got pretty low debt, which is critical during times of recession. Companies that have slow debt, they've got a lot more leeway when things turn sour, when they're not making as much money, okay? If a company is not making much money, but it also owes a lot of money, that's a recipe for disaster, guys. So APD actually has a debt to equity ratio of only 0.3, which is pretty good. It's definitely low amounts of debt, which is another reason why I personally own this company and I love it. Now, stock number 4, guys, is American States Water. It's a utility company, and utility companies tend to do pretty well during recessions, okay? Think about it. People still need water. People still need electricity. They need gas, okay? They need to be able to heat their homes regardless of the economic climate, all right? So that's why utilities tend to be quite consistent during recessions. Now, when you buy American States Water Company, ticker symbol AWR, it's got a pretty low dividend yield, okay? Only 1.58%, definitely nothing too crazy. And actually the 5-year dividend growth rate hasn't been that crazy. It hasn't been that quick as of late. But if we actually zoom out a little bit more, the dividend growth rate over the last 10 years has been 8.7% per year. So actually, if you sum 1.6 with 8.7, we go over that, nice 10% annual growth or annual return on investment we're looking for. And one last thing I want to mention is that even though Seeking Alpha says that the dividend growth rate has been of 19 years, again, that's not accurate. American States Water is actually the company in the United States of America with the longest dividend growth streak, sitting right now, as of recording this video, at 65 years, guys, okay? It's incredible. They've been increasing the dividend non-stop every single year through thick and thin, through recessions since 1955, okay? So if that doesn't scream stability, if that doesn't scream, recession-resistant stock, I don't know what does. Okay, finally, stock number 5 is called Bank OZK. It used to be called Bank of the Ozarks, but it had a little bit of a rebrand, okay? Now, this is a bit of a different stock to the other 4. It's in the financial sector, and it's just it's a regional chain of banks. It's actually only got 250 locations, okay, banks in 10 states. It's definitely different to the other stocks, which are mostly, international stocks or much more expanded stocks with bigger market capitalizations. The thing about Bank OZK is that their metrics, and especially the dividend metrics, are through the roof. You don't see companies like these very often. Now, Bank OZK actually has a pretty long history of withstanding recessions. It's been increasing its dividend non-stop for 24 years, okay? So in there, you can actually fit quite a few recessions already. Now, normally this stock has a dividend yield of around 1.8%, at least that's the average over the last 5 years. But you can now actually get it at a dividend yield of 5%, guys. That's insane. And again, I own this stock. I really personally do really like this stock. It's a very well-managed company. So that dividend yield is great, okay? But wait till I tell you how quickly this company has increased its dividend over the past few years, okay? Have a look on your screen right now. Ignore the latest dividend increase. It's definitely their worst dividend increase since 2009. But look at the history, guys, okay? Over the last 10 years, the average dividend growth rate has been over 20%. And actually, if we zoom back 20 years, they increased the dividend by almost 20% per year. So yeah, even though the dividend growth rate has decelerated over the past few years, you're still probably going to get a 20% annualized rate of return, okay? At least as long as they can keep increasing their earnings at the rate that they have been doing so, over the past few years. Now, using the rule of 72, at that dividend growth rate, in fact, at that growth rate of 20%, your money is going to double every 3.6 years. Imagine your money doubling every 3.5 years. You'd be rich very, very quickly. Okay, guys, so those were my 5 picks for 5 recession-proof stocks. Now, as I promised earlier in the video, I'm going to now reveal the beta value of each one of these, okay? Now, if you don't know what it is, the beta value is a number that it measures the deviation in volatility, okay? How much the stock price can actually deviate from how much the overall market's stock price deviates, okay? So basically, it's a deviation. It measures, a stock with a beta of 0 means that it's going to have the exact amount of volatility that the overall market has. And if it's got a higher beta level, a higher beta number, it's more volatile. If it's got a lower beta value than that, it's less volatile. So the most volatile stock out of those, and this should come as no surprise, it's Bank OZK, purely because it's in financials. And it's a smaller company. Those tend to be more volatile than larger, safer companies. Now, the beta value of OZK is 1.91, which actually it's not that great. It means that the stock price tends to, be way more volatile than the market. Remember, that's just stock price, okay? That doesn't have anything to do with the earnings of the company, the dividends of the company, okay? Dividends are not affected by stock price. Now, the next stock with the most volatility in this list is Microsoft, with a beta value over the last 5 years, okay? I've got this from Morningstar.com of 0.94, which actually means that it's slightly less volatile than the overall market, which is great. So while the stock market is fluctuating and, going crazy, Microsoft is going slightly less crazy, which is always good. Then we've got Air Products and Chemicals with a beta value of 0.85. So again, slightly less volatile than the market, but not by much, okay? Until this point, it's all good. Now it gets a little bit crazy, but I'm going to explain what I mean. So Hormel Foods actually has a negative beta value of minus 0.06. What does a negative beta value mean? It just means that the stock price in general of that particular stock tends to do the opposite of what the market does. So when the overall market is going up, this stock's going down. When the stock market's going down, this stock is going up. This is actually really good during recessions, because it's very easy to look at your stocks and feel panicked that you're losing money everywhere. That's why companies like Hormel Foods are really good to have in your portfolio, really defensive companies that are not as volatile as the market and have a very low level of volatility. And then finally, we've got American States Water, AWR, with again a negative beta value of minus 0.08. This is no surprise as it is a utilities company. So again, very low volatility with most utilities companies, especially this one, okay? It's not a super fast growing stock, but it's got that dividend growth streak of 65 years, which is just mind blowing. Okay guys, I really hope you've enjoyed this video. It's taken an awful lot of research, an awful lot of work. So if you enjoy this and you want to support me and my channel, then just do a few things. Click the like button, please, if you've enjoyed it. Share this video with someone who, just looking for recession-proof stocks, okay? Someone who's actually going to benefit from this video, okay? Just share it. And finally, if you could please subscribe to my channel. I create these videos every week. I'm actually planning a 30-day video challenge in the near future, so stay tuned to that. Click the notification bell to be notified whenever I release a new video. Yeah guys, just in general, I really hope you've enjoyed this video. If you have any ideas for future videos, I'm all ears, okay? Let me know in the comments below if you have any ideas at all. And yeah guys, like, subscribe, all those YouTube things, and I will see you in the next video. Have a great day. Bye.